Good afternoon. This is the Chorus Call conference operator. Welcome, and thank you for joining the Tinexta Group consolidated results as of the 31st of March 2024 conference call. As a reminder, all participants are in listen-only mode. After the presentation, there will be an opportunity to ask questions. Should anyone need assistance during the conference call, they may signal an operator by pressing star and 0 on their telephone. At this time, I would like to turn the conference over to Mr. Joseph Mastragostino, Investor Relator. Please go ahead, sir.
Yes. Good afternoon. Good morning to the folks in the U.S. Thank you for joining Tinexta's 2024 first quarter results presentation. Here with me today, Oddone Pozzi, Group Chief Financial Officer. As a reminder, all the relevant documentation for the first quarter 2024 results can be downloaded from our company website in the Investor Relations section. For the purpose of this call, I will go over the first quarter 2024 highlights and updates. Oddone instead will go over the first quarter 2024 financial results, as well as the business unit's performance, providing us with a deep dive. The last part of the call will be dedicated to Q&A, and the recording of this conference call will also be available on the company website, and it will be posted upon completion of this call. At this point, I will kick it off by turning to page 4 of the presentation. So starting from page 4, you see we have provided you guys with classic key data per quarter. We start with double-digit sound growth from in terms of revenue, which reached almost 100 million and 98.4 million. EBITDA adjusted came in at 15.4 million, growing around 3%. Versus the prior year. EBITDA on a reported basis was close to 9 million, and EBIT adjusted was around 8.1 million. I think it's worthy of mention that net profit on an adjusted basis reached 6 million, and even more interestingly is also the free cash flow adjusted on a continuing operation base, which reached a very considerable 27.2 million in the first quarter. Net financial position came in at 240, and this is a fully function of the acquisition that you all know, which is related to ABF, which was closed in January of this year. At this point, I will be turning to page 5 of the presentation. Most of the comments of the numbers that you see here have obviously been commented, but I would actually start by talking about the first quarter from a qualitative perspective, right? The first quarter represents a gradual start of the year, and that was mainly driven by the well-known seasonality. We will need to stress the fact of the seasonality during this quarter, and also in perspective in terms of what the year will be. And we have dedicated actually a slide on this, and we would like the market to be very accustomed to the seasonality of our quarters going forward. I think it's also important to highlight that, that the adjusted net profit on a continuing operation base is the real, performer in terms of indicator when we look at the various numbers. Obviously, we have to give out EBITDA reported, EBITDA adjusted, but on an adjusted basis, I think it's important to highlight how adjusted net profit is obviously a much better indicator. NFP over LTM is, again, a function of the most recent acquisition. We're up at 2.32 times, which is, again, a function of the recent acquisition. Going to the different divisions, Oddone will give you a deep dive, but let's start by saying that the top line on all three business lines grew. Starting from Digital Trust, Digital Trust kicked off the year very strongly. It grew 21%. And even more important was EBITDA, which reached 36%, with a very excellent EBITDA margin, which was around 31%. Again, another historical high for the division, so kudos to Digital Trust because they have started the year very well. Cybersecurity grew nice and healthy 16% in revenue. EBITDA hit a plus 10%, and the margin was around 10%. Even in cybersecurity, we must highlight that there is some seasonality, and it is more pronounced in the latter part of the year. Business Innovation posted a single-digit growth, around 4% growth, and obviously in revenue, and the EBITDA came a bit over 1 million. We'll extensively discuss about the dynamics about Business Innovation. In terms of the most recent events, I'm on the bottom part of the slide 5. We reached 100% consideration of the 3 cybersecurity companies, namely Yoroi, Swascan, and Corvallis. As a reminder, there is no impact in terms of net financial position because it is already included in the net financial position at the date of the acquisition. We also, during the quarter, launched a new strategic and operational advisory business for small, medium enterprises. We all did, obviously, are aware of the fact that we announced a very large acquisition and completed it in January. It is about 74% of ABF. And the board of directors today approved the start of the share buyback program, which we will execute according to market dynamics. Now, going to page 6, I think page 6 represents more of a graphical representation of the numbers that we already highlighted. So mostly important is to turn to page 7. Now, I think we should focus extensively on page 7 because it represents, first of all, the history of the group from an EBITDA perspective in particular, because that is what we will be concentrating on. But the most important thing here is the weight. The weight of second H in the last 3 years has considerably grown. It was 60%, and I'm talking about the EBITDA adjusted, in the second H, so that includes third quarter and fourth quarter of the year, was equal to 60% in the year fiscal year 21. It was 61% in the fiscal year 22, and even more important was last year in 23, where the overall weight of the second H EBITDA was 63%. This year, as you can see, we started the year, as we announced, in a most gradual way. The overall weight of the single quarters can be found on the bottom of each histogram, and you can see that the first quarter for this year represents around 12% of the data, considering the midpoint of the 2024 adjusted EBITDA guidance. So as you can see, the overall relative weight of the second H will be even higher this year. So we want the market to be acquainted with that, and that's also one of the big elements, I think, of our business model. Remember, business innovation has a relative weight, which is obviously very important and much more significant in the second quarter, in the second H. So as you can see, the cadence of the single quarters shows a very light first quarter, a bit more pronounced second quarter, and then the big, obviously, between Q3 and Q4, mostly being around fourth quarter. So we want the market to be accustomed to it. We are preparing the market for it in order to have a much more, I would say, gradual outlook for the market. Let me stop there. Let me leave it to Oddone to do a much more deep dive onto the numbers. We also will go give you a nice outlook on the adjustments so that you have a very clear P&L, and then we'll wrap it up with some Q&A. Oddone?
Okay. Thank you, Joseph. Good afternoon, everybody. Thank you for joining us for this conference call. I will start from page 9, where we have the income statement. Joseph already explained how different business units, and then I will further deep dive. But, you see the revenue is going up by almost 5%, mainly driven by all the business units. In terms of EBITDA adjusted, definitely we overperform the previous year with the different perimeter. And as you can see here, we have a mix that I'm going to explain that is the explanation for the drop of the EBITDA margin. Basically, as a revenue mix during Q1, we had more business from the business unit with a lower EBITDA margin. And also in the cybersecurity, we deliver a revenue mix with more weight from the products that are carrying definitely a lower margin. So overall, the EBITDA landed at 15.4 with 15.6% EBITDA. Definitely, as Joseph clearly stated, we deliver the best ever EBITDA margin from Digital Trust. The EBITDA margin from cybersecurity was definitely aligned to the previous year, again driven by a worse revenue mix with more product. And if we look at business innovation, definitely there we have a lack of profitability driven by two things. First of all, the first quarter of ABF is negative in terms of EBITDA, something that we already expected very clearly. Revenue for the first quarter accounts for 5% of the total revenue, so you have a lower absorption or fixed cost during Q1. Second, as a revenue mix from Warrant, again expected with lower weight from the subsidized finance, has driven a lower EBITDA margin. We do see this as a temporary situation, also because the Industry 5.0 that we expected to start in Q1 has been, would say, approved, but definitely delayed at the end of May. So from that on, I think we could compensate the lower revenue that we are generating in subsidized finance. In terms of non-recurring costs, this has been a quite heavy quarter. Obviously, we completed the deal with ADF, clearly the largest deal ever of Tinexta Group, and this brought quite important cost of transaction. Basically, in our view, it's an additional cost of the enterprise value, but accounting-wise, we have to book there. In terms of depreciation amortization, the incident is slightly above previous year. Here, the continuous level of investment to improve our products and solution is there, and but we do see is honestly as we expected. Net financial charges improved compared to previous year. Part of this is driven by a favorable adjustment of an earn-out of Ascertia for 1.1 million. For the rest, we are not yet been impacted from the new financing that will start from early May. Definitely, our level of indebtedness was very low at that time, with a very low interest rate, thanks to the IRS that we put on that. And in the meantime, we were able to monetize the cash available with some time deposit. Let's move now to page 10 in terms of net capital invested. So if we see our balance sheet, basically we have a net capital invested of not far from 700 million euro. 1/3 is financed by the net financial position, and 2/3 are total shareholder equity. The increase of net invested capital is totally, I would say, driven by the acquisition of ABF, that I may recall is about 155 million euros. And on top of that, we have to consider that this includes also the net working capital of ABF that is positive by almost 20 million. So the net financial position landed at 240 million, as we clearly expected. And I have to underline that the free cash flow, as Joseph stated, especially the adjusted free cash flow, was very positive with a strong growth compared to the previous. Shareholder equity is for 451 million euro, and obviously includes the results of the period, as well as the put adjustment that we have in our shareholder. If we move to page 11, I will keep your attention to the adjusted free cash flow of the continuing operation. We deliver a very strong growth in terms of 20%. So it means that obviously what we invoiced and how our revenue of Q4 has been cashed, actually, obviously, during Q1, improving the performance compared to the previous year. And this is a very important indicator to us. If we look at the last 12 months, the Q1 bridge, sorry, again, as I mentioned, is here with a strong adjusted free cash flow and the significant investment in ABF. If we look at the last 12 months, first of all, I think we need to highlight that the adjusted free cash flow is 61 million euros. This is a very solid, strong figure that support our capability of converting cash, converting our EBITDA into cash. So this is a very important figure. So we were on top of this, net financial charges over the last year was basically close to nil. And again, this the result of the very disciplined approach to the net working capital. Dividends accounted for 32 million, including also the minority. Obviously, the largest change is within the acquisitions. So basically, we have almost 250 million. So all the debt is driven by this. And with the acquisition of ABF for 155 million, the acquisition of the 20% of the minority of Defense Tech at 25 million, and Ascertia, including obviously both ABF and Ascertia, including the put and call that we have there. We don't have other major changes over the last 2 years, and you can see here also the profit of 3.4 million related to the OCI derivatives. So let's move to a deep dive to the business unit. As I mentioned here, very quickly, we have seen Digital Trust, let's say, overperforming. Cybersecurity, considering that the Q1 is the weakest quarter of the year, still deliver what we were expecting. And we have business innovation driven by the key factor that I already mentioned, but I will deep dive. So let's move to Digital Trust. As we say now, probably we are talking about the last 10 quarters. The performance of Digital Trust has been extremely positive. We have seen over the last 10 quarters the revenue going up in the range of 8 to 10%, with the EBITDA constantly better for 3-4 percentage point more, and also in this quarter on I would say on a like-for-like basis was up almost by 12% on organic basis. If we add the performance of Ascertia, that is obviously in Q1 is speaking their results, the performance being 21% with 36% growth. I would say that all the different components of the business went very well. Also the activity in France were positive. Also the activity we have in Visura growth in the range of 10% in the revenue and 15% on EBITDA. I would say everything is moving accordingly to what expected, continue to deliver results with very nice operating leverage, and all the product lines moving very strong accordingly to our plans. We have no significant comment here. It's not reiterating the capability to deliver strong results. We continue to invest significantly to support future products, future development, and support customers' solution, but this is not impacting our capability to a strong cash conversion driven by the fact that the working capital here is negative. So Q1 continued very strong, aligned with the last 10 quarters, I would say, very positive. Let's move to cybersecurity. Also here, again, although Q1 is not the most important quarter, we continue strong in terms of growth in the range of 60%, with the EBITDA going up 10.1%. Obviously, we are not having worst margins if we look at business by business. Obviously, during Q1, we deliver a mix between services and products that is more weighted on the products than on the services, and this is the reason why the EBITDA margin is dropping from 10.2 to 9.7. This is not absolutely a trend. It's an occasional situation, and we do expect the EBITDA margin move accordingly to our expectation and delivering an improvement compared to results as 2023 as a percentage of revenue. We continue to develop our business in the pure cybersecurity solutions with positive indicators from the customers, and obviously also in the digital transformation side of business, we are continuing very strong and positive. Our pipeline is increasing compared to previous year, and we do expect also in this segment a better delivery than previous year. So overall, I would say positive results and good pipeline in order to address Q2. Let's move on business innovation. Obviously, from the external standpoint, it's quite tricky to understand the figures. I try to be very clear, or at least as clear as possible here. First of all, I think it's worth to recall to everybody that last year we delivered in Q1 5 million euro EBITDA, and then we ended up the year with 51 million euro. So Q1 is not at all the main part of the business, and so this has to be, everybody must to be very aware of this. Second, as a revenue mix, we do expect it at the start of the year, the Q1 being weaker as definitely subsidized finance has lower rates that was clearly expected. And potentially we could have expected a better start of the new Industry 5.0. This is going to be delayed by 2-3 months from our initial expectation, but we are very confident this year is just a matter of to implement the new regulation. For the rest, I think that as I explained it before, the ABF result is negative in the first quarter, but again, the seasonality of ABF is basically a mirror of the seasonality of Warrant. So therefore, obviously, we will expect a very strong Q4 and Q3 as Joseph anticipated during his part of the presentation. So obviously not the best start, but no other indicators that this is a threat to the delivery of full year results. I think this is all. I would say very positive is the cash flow of this part of business during Q1. This means that we are collecting properly the last part of 2023. Now I will revert back to Joseph, and then we will be ready for the Q&A part. Thank you, everybody.
So following, the deep dive that Oddone obviously gave us, which I think is always of high value added, we confirm our guidance in terms of 2024 versus prior year. Revenues, as a reminder, are expected to come anywhere between 21% and 23%, of which 7% organic. More interesting is EBITDA adjusted, which is expected to come in a range of 28 or 32% growth versus prior year, of which 10 organic, and then obviously the leverage ratio, net financial position over EBITDA adjusted, is expected between 1.7 and 1.9 times.
This, just to be very crystal clear, does not include Lenovis, for which we announced the closing at the end of last month, as well as no effect from the potential call we have on the tech. Okay.
Just to make it very clear, so it is with all the announced acquisitions that we did already. At this point, I will leave it to the operator to open the Q&A for us, please.
Thank you, sir. Excuse me, this is the Chorus Call conference operator. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. To remove yourself from the question queue, please press star and two. Please pick up the receiver when asking questions. The first question comes from Isacco Brambilla of Mediobanca.
Hi, good afternoon, everybody. 3 questions on my side, one for each business unit. Starting from Digital Trust, more specifically Ascertia, doing some rough calculation on the perimeter effect on the EBITDA and revenues. Looks like Ascertia has been a great contributor to EBITDA of Digital Trust. Could you just confirm the company was accretive to the EBITDA margin? Because I was thinking about a dilution in the first month of consolidation. Also, if you can share any target for Ascertia in terms of revenues and EBITDA for the full year. Second question on Business Innovation, considering all the elements you mentioned and the fact that first quarter is very light, seasonally speaking, is it reasonable to expect the division to fill the gap at current perimeter in terms of revenues and EBITDA by the end of the year? Last question is on cybersecurity. You mentioned in the press release orders at 29 million euros as of the end of the first quarter. How should we read this data, which is the time horizon to attach to these orders? Are all of these to be delivered by the end of this year, or some of them are of a multi-annual extension?
Let's start. Good afternoon, Jacopo. Okay, thank you for your question. Yes, you are right. Ascertia accounted for in the first quarter for around 6 million euro revenue and 2.5 million EBITDA. Obviously, driven to the seasonality, I think this is accretive definitely into one, but on a yearly basis, this percentage of profitability will be diluted because we have historically a concentration in Q1 of our profitability. So this is the first point. On the BI, filling the gap is our goal, definitely. As of today, we do not have information for which we will be not in the position to achieve the result. Obviously, next quarter orders will be very important, but we have seen also that last year, we entered Q3 with not extraordinary portfolio of orders, but then we were able, in any case, to deliver the result. As I mentioned before, the Industry 5.0 is a key element, no doubt about this. We are suffering a little bit of delay in this, in issuing, rules and putting, this opportunity on the market. I think that by June we will be in a position to sell the solution and the opportunity to our customers. We are already working with our customers, trying to explain to them exactly how it works and potentially how they could benefit in order to stimulate their interest. Obviously, they are interested. There is interest on the market, but everybody was waiting for the final definition of the final rules of how this will be applicable. So the level of investment is a little bit, from our customers, a bit on order as soon as everything will be clear. But we are already ready to work with the client, and we already are working with them in order to identify clearly the opportunity there. So we do expect this. So far, the component of the digital part, let's talk about the acquisition of Enhancers and Plannet started the Q1 very well, with more than a double-digit growth, with proper profitability. So this is another part of the business that started well. So obviously, challenging year as usual, but we have opportunity there to fill the gap and to achieve what expected. Sorry, the question on cyber, in terms of backlog, definitely we have to deliver more than 100 million euro revenue in this area, as you know. So, backlog, I would say, is mostly related to the current year. Again, here, we do not see major risk. The reason why overall we confirm the guidance. Definitely is, again, we develop ourselves a challenging plan with an important growth on cybersecurity. We are in the process of complete the merge between the four entities. Last week we launched the new organization. and the new business model that is in place now. And we do expect a better capability to address, to manage internally and to address customer needs.
Okay, many thanks, Oddone.
Thank you, Jack.
The next question, sir, is from Alexandra Arsova of Equita.
Hi, good afternoon. Thank you for taking my questions. A couple of my hand. The first one is on Digital Trust. So we saw, again, a very solid growth profile in this quarter, plus 8% in revenues organically. So I just wanted to understand how much of this 8% is volumes and how much is prices effect, and then a little bit of trading update on how it's performing the Digital Trust division in this first part of the second quarter. Then second one on business innovation, just a follow up on what you were explaining before. So you were mentioning that you expect to see already some effects of the Industry 5.0 in June. So should we expect a sequentially better second quarter in growth rate terms vis-a-vis the first quarter, which has a double-digit decline? And sorry, the last one. So you already mentioned that your figures do not include the guidance, does not include Lenovis and Defense Tech. So do you have any maybe timing of when you will start maybe consolidate Lenovis and maybe an update on Defense Tech? Thank you.
Yes. No, here I am. Digital Trust, no, it's not driven by volume and or pricing. We are continuing absolutely as expected. We continue. You have to consider that one part of the business is OTS, and here prices and volume is an important matter. But on the other side, we have DTM, where you have a complete solution that is different customer by customer. Any case, there is no a key element that is driving the growth. The growth is driven by the capability of InfoCert and other components to stay in the market, in a profitable way, and being able to manage fixed cost, delivering an average. So here you may see it since many quarters. There is no specific time. Definitely during early 23, we did some activity on pricing. Because inflation was there, and so we adapted the pricing in order to compensate the impact on salary and third-party services of the cost, and this perfectly was applied. So you have seen from 22 to 23 no change in the margins, and Q4 even improving. So this is the picture. Q2 started well as ended up Q1, so I'm not able to predict now. It will be 9 or 8.5 or 8% growth, but still we will have a growth not far from 10%, and EBITDA growing more. Obviously, this is a normal way. Then if it comes a big project with a low margin, probably in a quarter we may have slightly different, but this is a very stable and recurring business. On business innovation, what I was mentioning is then we may start from June to sell Industry 5.0. So the revenue will come down the road over the next month. So I think this is basically the situation. Again, we have several lines of business. We explain how they are moving, and this is the situation. Definitely, Industry 5.0 will be a key driver of the final result. Lenovis will be reported during Q2, and we are discussing they're going to consolidate by April or by May, still with the auditor, but it's not changing the picture in these few months. In Defense Tech, I would say the board will analyze in the next weeks the dossier. Results 2023 of Defense Tech has been released 40 days ago. We are doing the relevant and proper analysis of that. When we complete them, the dossier will be brought to the board for a decision.
Okay, thank you.
The next question is from Chandra Sriraman of Stifel.
Yeah, hi. Thanks for taking my question. Good afternoon, Oddone. Good afternoon, Joseph. Just a couple from my side. So I noticed a big step up in terms of the inorganic contribution in Q1, and this is also goes hand in hand with this big jump in international growth. So can you just talk a bit about this? What drove this acceleration? And my second question, I'm just trying to understand the impact of the PNRR. You mentioned that it's not in the guidance, but you're highlighting that it was one of the reasons, the delay was one of the reasons for the weakness. So can you square the difference and also quantify how big this could be, the PNRR impact for this year? Thanks.
All right, I'll take those, Chandra. So a couple of things. Let's start with the first part, right? You were asking about the step up in inorganic versus the Q1 and therefore the international. As you all might recall, during the Capital Markets Day, we heavily stressed the fact that international revenues are growing, right? The company has now reached a considerable size, and therefore the revenues from a overall group perspective are expected to grow up to 25-26% by the end of the plan, which is 2026, right? So obviously, this is a function of what is all of our foreign subsidiaries and also the acquired companies. So we are growing specifically. If I look at, for example, Digital Trust has done a considerable jump in terms of foreign revenues, reaching a very considerable percentage point. Q1, obviously, it does not represent, 1/4 of the entire year, but I think at least for Digital Trust, it represents a good proxy of where we are going in a directional phase. So stay tuned to see what the overall percentage will be on a yearly base, but we have not given a specific, foreign revenue percentage guidance for the year. We know that by the end of 2026, we should reach at least 25-26% of overall group revenue coming from abroad. The second question, I want this to be very clear. We mentioned PNRR from a BI perspective. Let me walk you through it so you get a better understanding. It has nothing to do from the potential impact that the plan could have had when we started discussing about the PNRR. What we are referring in BI is Transition 5.0. Let me walk you through with greater detail. All of BI's business in the past 3 years, when we refer to subsidized finance, is referred to the so-called Industry 4.0 or digitalization. So that means that you get, to make it simple, tax breaks, subsidized finance, if you, being an entrepreneur, are applying for any sort of tax breaks in that realm or in that category of investments. Now, as you all know, and this is the reason why you've seen a contraction in margins in the BI, the 4.0 margins and deductible rates have been lower year over year, and that's why we actually saw a reduction of margins in BI in the first quarter of this year. What will come later this year, and what Oddone was referring to, is the rephasing of that part of the plan of the PNRR referring to Transition 5.0. Remember, Transition 5.0 dealt with everything that's relating to investments referring to environment, improvement of energy, and so on. So what we are witnessing from a BI standpoint is basically a second age increased weight in terms of margins coming from that type of investment. So the entrepreneur right now is coming out of a 2023 that has been obviously a very busy quarter, specifically the fourth quarter for BI. The first quarter is usually very light, and now obviously all the efforts are being concentrated on both the 4.0 that is residual and the 5.0, which will kick in no later than the second part of the year, so after June. So it is obviously the first two quarters will follow the same type of logic, and then the Q3 and Q4 will follow a more, I would say, 5.0 type of logic when it comes to BI. I hope this is clear because we need to make it very clear to the market.
Perfect. Thanks. Maybe a quick follow-up. Can you give us a sense of the seasonality of ABF in Q2 and Q3?
Yes. Still we are not expecting significant, change. It's a trend that is what we have learned from the due diligence is a trend where, Q2 should be better than Q1 and Q3 even better. Definitely is Q4 is the key element. You have to consider how these businesses are working here. Basically, we are talking about investment from our customers that are subsidized. And so basically, a customer has a budget for doing an investment. So the budget of a client is over the year. If you look at Italy with subsidized finance, they are running to complete, put up and running the investment just before the year. So in the next tax filing, they can deduct the amount earned from this investment. From subsidized finance related to ABF, basically there you have to file to a public body, and when you get the positive answer, then you have still timing for getting the cash from them. So here again, also here, the most important part of the year is expected to be late Q3 and Q4.
Great. Thank you very much, and all the best for the rest of the year.
You're welcome. You're welcome.
The next question is from Carlo Maritano of Intermonte.
Hi, good afternoon, everyone. I just have a quick question. You mentioned during the presentation that CertEurope is performing well. So I was wondering if you could provide us some more color on this company and how it's progressing after the change in CEO, if you're seeing an improvement in the trajectory compared to the past. Thank you.
Yes, Q1 of CertEurope was positive, both in terms of revenue and EBITDA, growing in the range of 10%. So this is absolutely positive. Definitely is not the most important quarter, but still it's important to start very well compared to previous year. Second, we improved our capability to put in the market offers on the new InfoCert solution. So, as you may recall, we appointed late last year a new CEO after the exit of the minority shareholder. And then, we had just on board a new sales director. So the company is very well organized, is already putting in the market InfoCert solution, and we do expect, the growth of the revenue coming, to be, pushed by the sale of new InfoCert. In any case, this is the challenge we have when we go abroad, and I think we are working in the right direction.
Carlo, do you have another question? No, if not, I think there's another last question, operator.
Yes, sir. Sorry, I apologize. The next question is from Russell Pointon of Edison.
Good afternoon, Oddone and Joseph. 3 questions from me, if that's okay. The first one, on business innovation, can I just be clear? So I understand that 5.0 has been delayed coming into the end of the year, and when you set your guidance at the start of the year, we knew that the deductibility rates were lower than what you'd anticipated. So was it just a reflection, therefore, that in the first quarter that actually the underlying volume growth decline was probably worse than you anticipated because of those lower rates? Or is it just the delay of 5.0 which has affected Q1? My second question on cybersecurity. In one of the documents, you quote market growth rates for 2024 to 26 of 6%. When I look back at the Capital Markets Day presentation from the start of the year, I think when you combine the 2 numbers quoted for digital and cybersecurity, you were looking for, I think it was like 5% compound growth, 23 to 25. So could you just talk about why it's slightly higher? Is it a different base, or is this an acceleration in market growth rates versus what you had anticipated at the start of the year? And my final question, just a small detail. Ascertia's revenue of, it was 5.6 million revenue in Q1. That's way more than double of what you reported in Q4, which was the first full quarter, I think, of its results. You did mention earlier there is some seasonality here, but I just wanted to get some feel for, is that Q1 representative of the normal seasonality, or has it just done a lot better than you anticipated in the first quarter? Thank you.
Okay, so Russell, let me walk you through a couple of things. Let's explain again BI so we get, there's a couple of moving parts to explain the quarter, right? And they are the following. First item, we talked about Transition 4.0, and as you correctly mentioned, the deductible rates are lower on a year-over-year basis. First point. Then we have an overall, and Oddone was very clear on this, an overall different mix from the other revenue streams. So we're talking about what we've been investing in the last 2 years to diversify the top line. We're talking about energy transition, we're talking about training, we're talking about green, we're talking about ESG, okay? So that has an overall lower volume because, and this is the fact that we want to stress, Oddone touched upon it, let me stress it again. When an entrepreneur falls into the new year, they have an overall budget that they need to deal with, right? So what happens then? What they do is they allocate their priorities. Their priorities will play out throughout the year. So if you look at the overall seasonality of BI on a like-for-like basis, it's always back-ended. It's usually Q3, end of Q3 and Q4. We've mentioned this for the last 3 years in a row, and this year it will be even more pronounced because we also have another business that came on board, which is ABS, which, let's be very clear, will follow the same type of logics. Another moving part is Transition 5.0. So the plan, the PNRR, states that 5.0 was supposed to come in, and it has come in, but it will show its effect only in the latter part of the year. And what will those effects be? They will be the investment. Again, we go back to the budget of the entrepreneur that will have to play out what their priorities are and check that the overall investments will have to fall under the umbrella of energy transition, improving in terms of energy consumption and all that, and they always have to deal with their personal budgets, okay? Now, will it be obviously to the advantage of the entrepreneur to invest? Obviously, because they will get back the money that they will invest. Remember, we also were very clear on the overall deductible rate. The deductible rate on 5.0 can reach up to 40%. So in this type of situation, we expect the second half to be definitely an area where EBITDA generation will be significant. Full stop. Now, you talked about CS growth rates. I think it's customary for specifically on the overall interim report that we give out a bit of color on what the market situation is. We have a guidance out there. We stick to our guidance. The market is probably higher or lower. It doesn't really matter. What we really want to be is grow with the numbers that we gave out to the market, and we have confirmed that guidance. Lastly, you were asking about the Ascertia. Ascertia has its own seasonality. Q1, yes, it's a very strong quarter, without any doubt. And in fact, if you look at Q1 versus the prior quarters that we had in the prior years, you see that Q1 is the best quarter ever, right? So what we expect is the overall delivery to happen as we are seeing. In this case, for Ascertia, Q1 was a stronger quarter. Full stop. I don't know if Oddone, you want to add anything?
Absolutely. This is important to keep in mind. So they deliver very well accordingly to our expectation, and so we are happy because this is what we were expecting, and we continue like this. We are working to improve the pipeline, to achieve new customers, but very important from the pure financial standpoint, they deliver a very, very strong Q1. That is what was in our calendarized plan.
That's great. Thank you for the answers.
You're welcome.
Gentlemen, at this time, there are no more questions registered.
Thank you very much for attending the call, and we'll talk to you soon for Q2 results.
Thank you. Thanks, everybody. Bye.
Bye. Bye. Bye.